Welcome back to Yahoo Finance Live. We'll take a look at shares of Robinhood. We are seeing the move here higher on the back of ARK Invest. Cathie Wood stepping in to buy nearly 2.4 million shares of the online broker as Robinhood touches a new low. The move coming after Robinhood released their Q4 report last week, showing that they had missed revenue estimates by more than $7 million. Let's bring in David Trainer. He is CEO of New Constructs. David, I feel like we talked to you when Robinhood first debuted. Certainly, you have flagged all the risks that come with investing in Robinhood. What do you make of this latest investment from Cathie Wood? And saying, look, this is an opportunity to buy on a dip, and we're not just talking about a small dip here.
Akiko, I don't think it makes any more sense to buy Robinhood at these levels than we said it made at buying at the IPO level. I mean, we were very clear about warning investors away from this before the IPO, and we feel the same way. And I think all that the latest earnings report reveals is that the business isn't working. They're not able to get to the scale they need to generate profits. And if the business doesn't make any money, how long does it survive? It's a very commoditized product. And look, I think most astute investors don't always put a lot of weight in Ms. Wood's analytics and what she's investing in. And I think Robinhood it's just one of those stocks that got hot in sort of the work from home COVID related theme, and it's petering out. And I don't know if the business has any legs going forward.
So we can talk about the business in the regulatory threat in just a bit, but specifically on the stock move. I mean, how much of these rapid declines we've seen in Robinhood are just about expectations being set too high? I mean, you could argue the company had kind of warned about the declines or the slowdown that could be coming, and we're a year out from what was at the height of the meme trade. Robinhood, a big beneficiary on that, but certainly investors couldn't have expected that to continue, right?
No, you're right, Akiko, and I think you bring up a great point about expectations. Do most investors really understand the expectations baked into stock prices? We talk about expectations all the time, but very few people go through the rigor of actually quantifying the future revenue, profit margins, cash flow expectations baked into stock prices so they can have a eyes wide open perspective on how expensive or cheap a stock is. And I think what Robinhood represents is a perfect example of a lot of enthusiastic investors, getting in over their heads, not really realizing just how expensive this stock was. Look, we pointed out it came out around 32, 34 bucks. I think it went up a whole bunch after that. We pointed out in our pre-IPO report, it's probably not worth more than $9. And that was giving it a lot of credit for a growth that it's not yet to achieve. I think it's probably a low single-digit stock. I think they've got to hope that a bigger firm buys them out just for their user base. But the business, look, free trades, anybody can do that. All right, gamifying trades has proven to be something that regulators don't really approve of. I'm not really sure what kind of moat Robinhood's business has, if any at all.
Of course, there is the threat of the SEC cracking down on payment for order flow, which has been a big revenue driver for the platform. Number one, how likely is a ban? And number two, if there is any sort of regulation short of a complete ban, what's the alternative for Robinhood?
I mean, they're going to have to start charging for trades. And look, this is where they are at a huge competitive disadvantage to the bigger firms like Schwab and Interactive Brokers, and that they don't have the assets under management to generate fees from anything other than trading. If they lose payment for order flow, it's done. And I don't even know if regulators have to make it illegal because I think investors are starting to be a little more sophisticated about just how much they're being surveilled and everything, but in particular their trades. And look, I don't know about you, but I would never feel good about doing trades for free because I'm giving my order away to someone to front run it. It's just not a good business model. It's not healthy. It doesn't feel very high integrity to me. And ultimately, we said this early on, in many ways, Robinhood is just a way to sell investors on exploiting other investors, right? I mean, if the business model is about making money by selling off your trades to people before they hit the market, and you get investors to buy into that. It's like cannibalistic, right? We make money by you preying on other investors, including you, maybe, right? Because I know Robinhood has given their people who've invested in the stock, some extra additional access to IPOs and things like that. So what we may be dealing with here, Akiko, is really as the retail market becomes more sophisticated about markets and investing, they may reject this payment for order flow model regardless of what regulators do.
How does crypto factor into your base case for Robinhood? I mean, certainly, we're talking about payment for order flow. Robinhood there was wide adoption because of these commission-free trades, but we've also heard the companies say that they see huge growth opportunities in crypto.
Yeah, again, what's the differentiation there versus Binance versus Coinbase? What other firms, even the larger traditional brokerages, are offering with respect to crypto? Crypto is not a get out of jail free card for a business model that doesn't work otherwise. What is Robinhood going to do in crypto that no one else does? I don't think there's anything there, right? Trading is a commoditized service. The value add that I think Robinhood and these other firms, especially all the robo-advisors, need to be thinking about is not just getting their clients to trade all the time, but helping them trade more intelligently, right? That's the new stage here. We think that's how you win business. That's how you build a moat around your business. Help your clients make more money, help them invest more intelligently, help them invest more safely, help them stay clients longer. Don't just try to get them to trade all the time so you can profit from that.
And finally, David, you said, potential alternative for Robinhood is that it becomes an acquisition target. But the question there is, what is there to buy? You mentioned the user base certainly could be attractive. What kind of acquisition are we talking about? Who could potentially be interested?
Yeah, Akiko, I'm not advocating an acquisition, right? I'm just saying that's the bailout here, because I don't know that the business ever really generates enough cash flow to trade more than a couple bucks per share. Maybe it doesn't even make it that far, right? Think about the competition they have and that competition's ability to give away trades for free in a way that Robinhood cannot without selling off the orders, right? So yeah, I think the best you can say is they have a decent amount of users, and maybe those users are valuable to someone. To whom? I don't know. I'm really just trying to kind of come up with things that might justify this stock not going to zero.
Well, David, we always appreciate your takes. New Construct CEO David Traynor joining us today.